Good morning and welcome to the Daily Rep from Pepperstone on the 21st of July 2017. I'm Darren Sinden. Right, let's take a look for the final time this week at the overnight price changes. Any moves to be aware of on the world's foreign exchanges? Of course, there was only one story yesterday post the ECB press conference. The strength of the euro rallied in an incredible way, really. You can see where it finished in New York, 116.31 against the dollar, and the gains it made on the day, 1% against the dollar. It crushed sterling, adding 1.4% against the British currency, and it made gains of 1% against the yen. The reason for that, simply because Mario Draghi hinted that the ECB would not oppose a rise in the euro, and the markets duly obliged. Okay, let's move on to take a look at what's on the calendar, events that may move the market today. It's not much in the way of high impact data, but there's still plenty for us to get our teeth into. The main focus of the day will be on Canada around 12:30 GMT. We have retail sales, consumer price index data, out a raft of price data and consumer behaviour data. That's all out at 12:30 GMT, 1:30 London time. Of course, all eyes on Canada because they were the first to move on interest rates, and clearly what's happening to inflation there may well determine what happens in future with Canadian interest rates. Then later on, another key factor as far as inflation and price pressures are concerned, the Baker Hughes US oil rig count. Not only will this affect oil prices, but of course oil prices feed directly into North American inflation expectations. So watch out for that number, and that's due at 1700 GMT or 1800 London time. And then to finish the week, as ever, we have the CFTC Commitment of Traders reports, the net positions in US dollar, oil, gold, the pound, Japanese yen, euro, and indeed the Aussie dollar. So that's if you're still trading at 7:30 GMT tonight, that's something to look out for. Okay, let's take a look at the breaking news and comment that's caught my eye overnight. Just a few headlines here to get our teeth into. First of all, UK Prime Minister Theresa May is to pledge today that there will be no Brexit cliff edge for UK businesses, rather a transitional approach to Brexit. So that may go some way to placate UK business fears. The International Monetary Fund, or IMF, gives conditional approval for a $1.8 billion loan to Greece as part of a wider rescue plan involving the EU. You may recall there was some talk of Greece coming back to the debt markets earlier this week. I find it hard to believe it can do that whilst it's still having to go cap in hand to the EU and the IMF, but we shall see. Moving to Asia, or rather the Asia Pacific, US credit card groups are said to be likely to apply for Chinese licenses within months, says the FT. And finally, in America, as if there wasn't enough political intrigue and policy issues in Washington, Donald Trump's legal team is set to probe Robert Mueller's investigators' backgrounds, and they're said to be looking for conflicts of interest. And this is the latest twist to the links with Russia debacle. So the Trump team to investigate the investigators. Make of that what you will. Right, I just want to cut to a chart now and really just emphasise the dominance of the euro on the world's foreign exchanges. I've drawn a chart here of euro versus the Aussie dollar. You can see the long-term trend, but the Aussie had been strengthening of late, but after yesterday's moves or the previous couple of sessions moves, the euro is now gaining again, and it looks like we're going back above that dotted longer-term uptrend line. So even the Aussie dollar is being pushed aside by the dominant euro at the moment. Lastly then, food for thought comment, something to take away with you into the trading day and the weekend, and I want you to think about this if you may. Despite suggestions that deflationary pressures have been vanquished in the Eurozone, lowflation is alive and well in the OECD countries, and this chart here exemplifies that with lines for countries with inflation under 1%, countries with inflation under 2%, and those with deflationary pressures in red at the bottom. Downward price pressures continue to dog central bank attempts to normalise monetary policy and will ultimately potentially hamper growth. So have a good weekend. Thank you for joining us. Please just take a minute to read the risk warning. Trading foreign exchange and CFDs on margin can be a risky business. If you're in any doubt of the risks involved, then please contact your Pepperstone account executive.